Are you looking for a flexible yet highly effective trading strategy? In this video, we're going to cover a price action scalping method that works across various assets and timeframes. Whether you're into Forex, gold, or even crypto, this strategy can be adapted to suit your trading style. First, we need to add our indicators. Head over to the Indicator Search tab and type in Triangular Momentum Oscillator with Real-Time Divergence from algo. This will help us confirm trends. Once added, tweak the style settings as shown to fit the strategy. If the histogram bars are green, we're in an uptrend. Red bars signal a downtrend. This gives us a reliable confirmation of the market's momentum. Now, add the next indicator. SM as SSL Hybrid Half Trend Indicator by Jara. Adjust the input and style settings as needed. This indicator has two main functions. It shows the current trend and helps guide your entries. When both half trend lines are green, we're in a bullish trend. When they're red, we're in a bearish trend. We'll be using price action patterns like the bullish and bearish engulfing candles to trigger our entries. Here's how to use them. When a bullish engulfing pattern appears, it signals a potential buy entry. But before jumping in, ensure the confirmation is valid. Both half trend lines must be green, and the triangular momentum oscillator should be showing an uptrend. If all conditions are met, place your buy order after the candlestick closes. Place your stop loss at the last swing low, and aim for a risk-reward ratio of 1 to 1.5. For sell entries, wait for a bearish engulfing pattern. As always, confirm that both half-trend lines are red and that the momentum oscillator is showing a downtrend. Once confirmed, enter your sell order after the candlestick closes. Your stop loss should be placed at the last swing high, with the same 1 to 1.5 risk-reward ratio for your take-profit target. If you found this strategy helpful, make sure to hit that like button and subscribe to stay updated with more trading techniques. Thanks for watching, and we'll see you in the next video.